Governor Roy Cooper offers contradictory statements about tax cuts for businesses. John Sanders recently highlighted the governor's contradictions in a John Locke Foundation research brief. John is Senior Fellow in Regulatory Studies and Research Editor at the John Locke Foundation. And John, this really is something we've seen from Governor Cooper ever since he came into office, even probably while he was campaigning. Doesn't seem to like corporate tax breaks, yet he then turns around and offers millions and millions of dollars of corporate tax breaks. What gives?
I think there's a very fine distinction that the governor draws that nobody else that I know of does. He opposes tax relief for corporations in general, but not in the particular.
And most folks would think the ones that are offered in particular would be the specialized breaks, whereas a tax cut for everyone is not a break. It's basically just changing the rate.
Yes.
So you talked about in this research brief some of the numbers involved, and you said so far this year, the governor has pledged over $930 million in tax incentives to just 22 corporations. That includes that major $845 million plus over 4 decades to Apple. We're not just talking about a few million here and there. This is big money.
No, the Apple giveaway blew the previous biggest tax giveaway incentives giveaway that the state has done, which was in 2020 to Centene, and the Apple giveaway was more than twice that. It's unprecedented amounts of numbers.
One of the things that's interesting about your brief is you look at the reaction to this news, but you actually then play around with it because you have the opponents of corporate tax breaks talking about how bad it is to give money to Apple and how good it is to have tax breaks that affect everyone. And then you say, but wait a minute, that's not what really happened. It was the opposite.
Well, to me, that's part of the story is we have this at least political inclination to object to, big corporate tax cuts. And we get the idea that it's the big evil corporation taking advantage of the small, taxpayers of North Carolina. And most of the time, it's the other way around. It's the taxpayers who are being hurt by not having tax relief are the small corporations. 99.6% of the corporations and companies in North Carolina qualify as small businesses. You're talking about close to 1 million. These are the local hardware stores and your little boutiques and your mom and pop shops and things like that. Your local employers. In
fact, you mentioned this in the research brief. You say those businesses that have fewer than 100 employees are the rich when Governor Cooper and his supporters want to denounce tax cuts for the rich.
Right, and then you go one step further. So you get that. And then you go one step further and you give these monstrous giveaways to the rich. I can't get over it. It staggers the imagination.
You also go into the research and evidence about what impact the types of tax breaks that Governor Cooper supports actually have, and remind us that the evidence is not very good. In fact, the opening line of your section in the research brief about this is Cooper's jaw-dropping cronyism, talking about giving away the corporate tax giveaways to particular companies. Cooper's jaw-dropping cronyism is supposedly justified by the promise of creating jobs. Then you say research consistently finds such claims highly suspect.
Right. Research finds that companies make a move for business decisions, and that includes a host of things, including access to high educated labor, access to good education, low tax rates, which is one of the top things that feature in not just low corporate taxes, but low personal income taxes, low property taxes. Businesses' decisions drive these, not incentives. And so in order for an incentive to be the reason for something to come, it has to be the marginal decision maker. And those are very, very rare.
One thing I thought was interesting, you took a look at items that executives have listed about reasons why they will decide to locate or relocate somewhere. And you had skilled labor, low regulations, low corporate taxes, low property taxes, good community colleges, and low personal income taxes. And then you say Cooper opposes 2/3 of this list.
Right. Well, what's interesting about that list, too, is that was research done on incentives specifically in North Carolina. And that was an economic research paper from 2015. So it looked specifically at CEOs giving, and it was over 600, I believe, giving their reasons for making decisions. In fact, the vast majority of them that had gotten incentives from the state, the CEOs couldn't remember if they did or not. That's because that's not the deciding factor.
One more thing let's talk about with this big Apple deal. And as we mentioned, you said this dwarfed the previous largest gift that North Carolina had given directly to a company. Apple was looking at North Carolina, apparently, and also Ohio. And one of the reasons that Ohio was very competitive was that it has no corporate income tax, no personal property tax, and low sales tax rates. And you make the point that apparently Governor Cooper and his team realized that those are important issues in competition.
Yeah, what I did there was quote directly from the executive summary of the JDIG project sheet, which listed Ohio as the state's top competitor, and those were some of the big items in favor of the state of Ohio was those tax breaks.
And begs the question of why North Carolina doesn't see the same benefits of having those types of policies here in North Carolina.
You know, ironically, was a couple of years ago on Small Business Week, Cooper, in a press release, actually touted those very things for North Carolina. We've got a low corporate tax rate, which we do since we have a corporate income tax. We have a relatively low corporate income tax rate. We've got low personal taxes. He was touting those, but he still opposed them. You know, I wrote about it because I said, "Hey, look who's sounding like us all of a sudden."
Well, if you'd like to learn much more about this, including details of all of the tax incentives we discussed, you can find them at the John Locke Foundation's website. It's a research brief with the headline, "Cooper's Corporate Welfare Hypocrisy Hits New Lows." Its author is John Sanders, Senior Fellow in Regulatory Studies and Research Editor at the John Locke Foundation. John, thanks so much.
Thank you, Mitch.